Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Now, we're seeing a consolidation across markets here ahead of today's Fed meeting. First, this morning, we had ADP payrolls. Came in hot. They were a lot better than expected. This could emphasize a little bit of what we could see from non-farm payroll Friday. But then ISM manufacturing missed. We're continuing to see somewhat downbeat manufacturing data here, not only in the U.S., but around the globe. So we're seeing consolidation in equity markets with major three-star resistance overhead, and the Nasdaq held back a test to new swing highs on the session. But then again, support below the market. The S&P held our level 2947 on a little bit of a shakeout here ahead of that ISM number, or right on that ISM number. But really, what matters today most is with the Fed and what is their narrative going to be. Right now, you're not seeing a rate hike being priced in 2019 at all. In fact, you're seeing the odds favor a rate cut. Now, ultimately, though, there's a good argument here that the Fed is priced in to be too dovish right now, especially when you got the White House calling for an immediate rate cut and bond purchases. What you want to be on the lookout for here today is if they take a not so dovish approach and ultimately not surprise markets, but remind them that they are there watching and looking for the tune of the data, and again, price in a little bit the fact that less of a rate cut odds or probability for the later half of this year. What would that do? You could see the equity markets come back in a little bit. Again, we are in earnings season, and earnings have been good overall, but somewhat mixed more recently. Look at Google 2 days ago. But again, it would bring in price action just a bit, and it should bring a buying opportunity on a pullback. What else would it do? You could see the dollar strengthen just a little bit. The dollar is weaker for the third straight day after failing at 98 on that good GDP number on Friday, or what was supposed to, headline-wise, say a good GDP number. So ultimately, again, you can see the dollar lift up a little bit. You could see stocks come in just a little bit, and then from there, the gold hasn't been able to get anything going at all this week. Strong resistance overhead, but we've been seeing a trend of lower lows and lower highs. And we talked about in the Morning Express today. It's creating a little bit of a descending wedge pattern. Now, doesn't mean this thing's going to fall apart, but you want to watch this descending wedge pattern. It could be bullish, but if the dollar strengthens today, we're going to see gold test lower once again. And as long as gold doesn't break down, there's reason to be upbeat in the months to come, but not immediately on gold. And then lastly, what we're really watching out so closely here is the treasury markets. And treasuries are really signaling a different tune as they are moving higher all week long, really, and after giving up some ground on Monday. Now, they sort of are showing that they believe the Fed holds this very dovish path. And if that is the case, we're going to see equity markets push out to highs, the dollar index weaken, and really create a failure from that 98 level. So again, there's two sides of the coin to look at in how the Fed speaks today, and how Fed Chair Powell speaks at his press conference and fields some of those questions, because ultimately he is going to field questions about the White House pressuring the Fed to cut. Give us a call. We're here to help talk about anything on the board, 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates. You can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.